investors, and welcome back to the Stock Sense Morning Brief. I'm Malik, and it's Friday, December 5th, 2025. After a week of notable swings, the KSE 100 found a tentative footing yesterday. We're here to break down the latest market action, key economic developments, and institutional moves to help you navigate your trading day. Let's dive right into yesterday's market performance. The KSE 100 index managed a fractional gain, closing up by about 138 points to settle just over 166,280. This translates to a marginal increase of 0.1%. This session offered a small reprieve after Wednesday's more significant decline of nearly 1,500 points, or 0.9%. Trading activity remained robust, with total traded volume exceeding 600 million shares and a traded value of over 31 billion rupees. Market breadth was quite balanced, showing 203 advancers, 223 decliners, and 51 scripts remaining unchanged. Now, turning our attention to sector performance, which segments significantly influenced the index yesterday? We observed some distinct movements. The automotive assembler sector exerted a notable negative pressure, contributing about negative 0.24 impact points to the index. This signals continued selling interest or concerns within this segment. On the positive side, investment banks, investment companies, and securities companies provided a healthy boost, adding around 0.13 impact points, indicating strength in the financial services space. Meanwhile, commercial banks also pulled the market down, albeit to a lesser extent than auto assemblers, with a negative impact of about 0.12 points. These three sectors were the primary drivers of the index's direction. From a technical standpoint, the KSE 100 index shows a largely bullish trend across most of its moving averages, particularly over short to long-term periods. However, the Hull moving average for a 9-period indicates some very short-term selling pressure. Looking at the classic pivot points, the index finds its pivot at approximately 163,630 points, with immediate resistance around 170,050 and support at about 160,250. Investors should monitor these levels closely as potential turning points. Moving on to corporate announcements, today, December 5th, is a busy day for board meetings. Sitara Peroxide Limited and Service Industries Limited are both holding meetings to discuss matters other than financial results. Additionally, Zuma Resources Limited will be reviewing its annual accounts for the year ended June 30, 2025. Keep an eye on these for potential company-specific news. There are no companies reaching their last day of entitlement for distributions today. In macro developments, the news flow presents a mixed but largely encouraging picture. On the positive front, Saudi Arabia has rolled over its $3 billion deposit for another year. This is a crucial development, bolstering Pakistan's foreign exchange reserves and providing much-needed economic stability. The government has also approved 13 billion rupees in telecom projects, aiming to connect over 5.5 million rural residents. This promises increased infrastructure development and potential subscriber growth for telecom companies. Business Recorder research also highlighted that the cement industry is finally finding its pulse, signaling a positive shift for construction and the broader economy. Furthermore, the Consumer Price Index, or CPI, shows a cooling trend, which could pave the way for a more accommodative monetary policy down the line. Pakistan is also actively seeking to provide Kyrgyzstan access to regional and global markets through our ports, potentially boosting trade and logistics sectors. However, some areas of concern persist. The oil industry has rejected digital integration without compensation, which could impact the profitability and operational costs for oil marketing companies. There are also calls for policy reforms due to flat cotton output, a deepening crisis that affects the vital textile sector. And perhaps most critical for consumer-facing businesses, wage recovery is nowhere in sight, impacting consumer purchasing power. Lastly, contradictions in agricultural trade policy could jeopardize agri-trade, a significant contributor to Pakistan's GDP. Now, let's examine institutional flows, which often provide valuable insights into market sentiment. Yesterday, foreign institutions were net sellers, offloading stocks worth about $6.5 million. Conversely, local institutions were net buyers, injecting roughly $6.5 million back into the market. Diving deeper into these local flows, we saw significant net buying from companies, tallying over $8 million, and broker proprietary trading, with nearly $1.8 million in net buying. However, overseas Pakistanis were notable net sellers, divesting over 6 million, and mutual funds also recorded net selling of about 1.4 million. Other organizations showed net selling of around 1.7 million. This indicates a mixed picture, with local corporate and broker activity offsetting foreign, diaspora, and some local institutional selling. Malik's take. The market is clearly navigating a period of significant crosscurrents, yet the KSE 100's marginal gain yesterday suggests a tentative balance. The Saudi deposit rollover provides crucial foreign exchange stability, and a cooling CPI strengthens the case for the state bank to potentially ease monetary policy at the upcoming December 15th Monetary Policy Committee meeting. This anticipation is likely a key factor supporting market sentiment. However, the drag from auto assemblers and commercial banks, along with the concerning news of stagnant wage recovery and flat cotton output, signals persistent underlying challenges for consumer demand and a vital export sector. The institutional flows, with local companies and brokers stepping in to buy while foreign and overseas Pakistani investors net sold, suggest domestic conviction, perhaps anticipating policy shifts, but also highlight continued cautiousness from international and diaspora capital. The index's ability to hold above its key classic pivot at 163,630 despite Wednesday's dip indicates a level of resilience. However, with immediate resistance around 170,050, investors should remain highly selective. Focus on companies with strong fundamentals and clear growth catalysts, particularly in sectors less exposed to consumer spending headwinds or those directly benefiting from government infrastructure spending and trade initiatives, like specific telecom or logistics plays, rather than broadly exposed consumer cyclicals or struggling auto names. The upcoming MPC meeting on December 15th will be critical for providing further direction on interest rates and consequently market sentiment. That's all for today's Stock Sense Morning Brief. Remember, this information is for educational purposes only and not investment advice. Always do your own research or consult with a financial advisor before making any investment decisions. Thank you for tuning in, and we'll be back tomorrow with another update. Until then, happy investing.